What the fuck's up, people, and welcome to a video where I'm gonna very briefly show you how you can use cumulative delta in your favor when you're trading. Briefly, what this is, the delta, it's pretty much the selling and buying pressure between the traders. The difference between the two, basically, very short explained. So yeah, let's just get straight into it. So what I usually use this for is I find entries, reversal, etc. So how this works is pretty much like RSI, relative strength index, but I like this a lot more because I don't know, it feels easier to follow. It feels like a second chart that you can see inside the chart, pretty much. Yeah, let's just get straight into it. So the first technique I use is pretty much, you can see that there's a downtrend on the delta right here. It's making lower highs and lower lows, but on the chart, if we mark from the same point here, we're actually making higher highs. Not insanely higher highs, but higher highs nonetheless, which this tells us is that buying pressure is like topping off. It's starting to fall off, and we are possibly to have a reversal in the next candlesticks. So what you do is, once you've seen this pattern, you wait for the jump up after, like, once you've confirmed that lower and lower. Once this closes right here, like you can see it went down, wait for the reversal upwards. Once it hits this, like in the middle of this candle, pretty much like here, pretty much like around there in the middle of the candle, you take a short position, pretty much like that, to put the stop loss a little bit higher than that, and then you target the bottom of the lowest point of the trend, so to speak. Not here, because it might hit that, but the risk to reward is still 3.6, and to go for a 8.26 risk, it's just, I mean, it could happen, but yeah, it's pretty much, it's better to take the profit too early than to get up in the reds, so to speak. So let's just watch this play out. Goes up again, makes a lower high, goes down, and oh yeah, that's it, the profit. Oh yeah, as you can see, it went down to this. We could have made a lot more than we did, but rather to be on the safe side, just bought consistency and not to gamble, pretty much. So what happened was, made lower lows or higher highs here, lower lows here, reversal in play, probably, not always, nothing's ever guaranteed on the chart in the stocks, and it's just the way it goes, but there's ways to obviously increase your chance of catching the stuff before it happens, pretty much. Let's take another example. Let's see if we get another example here. Let's see if we can trade a reversal right here. Okay, so let's just wait until this closes. As you can see here, we actually made a higher low right here, but we made a lower low on the chart. This means that the buying pressure is increasing. You can't see this on the chart because this is a lower low. This could just continue all the way down, but if this made a lower low, we would not enter, but this made a higher low. So what I usually do is I wait for the price to come back down to the middle of this candle, right around here maybe ish. You just wait for it, if it's gonna go down. If it doesn't go down, you could just miss a huge spike up, doesn't matter, rather miss it than enter, and then goes the other way. Oh, okay, it went down to this. You can see we are making higher lows, and we actually made a pretty fair jump upwards. So if you catch this jump upwards, don't enter in the middle of it, because you could enter here and then it could just go down. Still could make a little bit of profit, but it's better to wait for the reversal than to get stopped out. So it reached our target here, it made the reversal, started to go green again, so we enter. If we saw this on the live chart, we could have probably entered like around here, because after the first green candle right there, target the top of this, and we have our stop loss underneath this candle right here, because this acts as a resistance. Let's just see, yeah, and we hit play. Okay, we hit the take profit pretty quickly there. Damn. But yeah, that's pretty much how this strategy works. You can see inside the market like what's happening. Like you can see downtrend right here, but there's an uptrend on the delta. It's very slight, so I wouldn't enter with that much, with a huge amount here, because you want something like this, like a higher high, not even like this. This would be like good. This is a good example of a higher low. That would be like a, because then you could just wait for the pullback and then follow this straight up. One more thing is, you can see this lower here is not that far away from this. Like you can see it's not that steep, but on the chart, however, you can see that it's a lot steeper. This means actually, this means that the actual buying pressure is not decreasing. As long as it bounces, as long as it closes above the previous low, it's still like counted as a positive trend, or like a positive, it's an upward trend, sorry. But yeah, that's pretty much how you use this. It's fairly easy to understand. You just have to backtest it a lot, get the hang of it, because sometimes nothing's 100%, but the more you're familiar with it, the easier it gets. And but yeah, that's pretty much it.